interesting because today we have three different ecosystems, no? And it's going to be interesting, the discussion. So you Megan, you are based in London, right? So so you can give us a little bit of overview. How is things in London now with the COVID? How is it going?
I was going to say the COVID hub of Europe. I think, you know, we've been through our fair share. In the last 2 days, we've been having news of the kind of infections spiking up a little bit. So I think there's a bit of caution in the air, but you know, mostly things have bounced back. People are out and about, completely ignoring it. If anything, too much. So we'll see what happens.
Okay, so let's see how it goes. I really want to travel to London, so I don't know if we can access to London at the moment. It's a need that I need to double check, but I would like to visit it's a great city. I really love London. And have you been based in Paris now or London?
Good question. You know, I'm usually Eurostyle based, so I'm usually in between, you know, both cities, as you know, sort of swinging by Barcelona every now and then. I'm actually stuck. Well, I was in London when the sort of lockdown came up, and then I thought that, you know, weather and wine was basically better in France. I said, hey, you know, let's jump on the train back and spend the confinement in Paris, which was okay, by the way. The weather was amazing, so it was pretty cool. And then I've been back in London in July, so you know it was feasible. So that was cool. And now that they put the quarantine back into place again, but there's an exemption for frequent travelers, which I'm one. So okay. if you have the piece of proof, you travel to London or from Paris to London or vice versa on a weekly basis, you can actually avoid being stuck at home for 14 days. So I'm actually back in London next week. That's the plan.
Okay, that's great. And you, Peter, you are in Berlin or Stockholm, or where are you based now?
Exactly. I'm currently in Berlin and normally also based here. Obviously, a larger share of our team is also based in Stockholm and some people in San Francisco. But I think Berlin is one of the places or Germany, where we're relatively fortunate so far with infections per capita and the numbers so far. But it's currently it feels like one of more of the loose cities. So let's knock on wood that it stays the same in terms of numbers and how we can walk around here and everything.
Okay, good. So very interesting. So three cities, different ecosystems. So that's going to be a very interesting discussion. So let's start. So I'm going to introduce you a little bit yourself. So Megan Reynolds is investor manager in Crane Venture Partners. You are a venture capitalist that you are investing in seed stage and Series A from MVP to go to market for B2B companies. And you have already invested in 2 companies in Spain. So that's, and you are, basically you are investing across Europe, and Spain is one of the countries that you are as well focused. So many thanks for your time here, and it's going to be very interesting discussion with you. Ben Marrel is founder and managing partner in Breega. Breega is a venture capital fund based in Paris and London, and basically they invest in early stage in growth markets with innovative solutions and different verticals, quite agnostic in terms of verticals. We share one investment here in Spain, better to discuss other things rather than that, but yeah, we share one company, and you are very active as well in the Spanish ecosystem. Well, basically you know everybody, so you are very active, right? And Peter is principal in CREANDUM. CREANDUM is a venture capital based in, as we mentioned now, in Stockholm and Berlin and San Francisco as well. Quite agnostic as well in terms of industry, investing across Europe, and Peter basically is covering as well Spain. You have invested in one company that we really like. It's a company that we it's a shame that we didn't invest. It's Factorial, and we really love the team and the guys and all the ecosystem that they are creating in INNIC. So yeah, so very interesting the discussion with you as well. Your VC has invested in amazing projects like Spotify. So it's gonna be it's a pleasure to have you all of you in this discussion. So let's start with the first question. During all this COVID period, basically we did different webinars with Martín Caviedes, with different webinars with different local venture capitalists during the COVID. Were very interesting discussions. You know the majority of the guys, but I really wanted to do a more European panel, and now it's perfect to have this webinar with you, no? So my first question is, how did you live all the COVID period as a venture capitalist in the three different ecosystems? What was the reaction of your portfolio? Do you have any I don't know, histories of how the companies have reacted? In our case, with 40 companies that we invest and 300 customers, I don't know, the contingency plans were amazingly done, and I think that all the ecosystem have reacted quite quickly, and they've been very, very entrepreneurs in that sense. So what was your view? What was the first week of the COVID? How did you react? I don't know, ladies first. Megan, if you want to start.
For sure. So I think it's worth saying that we're a highly specialized fund. So we only invest in enterprise software. And as a team, we provide go-to-market leverage. So super, super specific. So our view on this is pretty singular. I think we've been really lucky in our little world of enterprise software throughout COVID. The enterprise demand for mission critical software has basically not been negatively impacted for the really mission critical stuff. So super lucky. I think actually what we've seen is that the pace of adoption is unreal. Like sales cycles are shorter, contract sizes are bigger. You can basically now sell any software from anywhere in the world. And I think that's actually had a huge positive impact. So kind of specific question on contingency plans, they were made and they were ruthless, but more or less they've been scrapped across the portfolio, which is really great for us.
That's interesting. So all the humanity has done a digitalization master, no, during this period. So all the B2B basically software, it's well, they have this change on demand. It has been a positive impact. What's your view, Ben, in your portfolio? Has been more or less the same, or well, black and white?
Look, to be fair, my first 4 or 5 weeks of confinement were a bloody fucking shit show. And it was crazy. For a very simple reason. I think, I sit on the boards of quite a few companies, and, I had the sort of pre-board meetings reviews, and then board meetings, and then post-board meetings reviews, and then extraordinary board meetings reviews because the plan wasn't totally fine, and you had founders that actually understood the situation right away. I think a bunch of people who have been serial entrepreneurs or old enough to have been through the previous crises were like, hey, this is going to be bad, so let's hit the road and find solutions for the future. And then a bunch of sort of younger entrepreneurs who were a bit less prepared, maybe, they didn't have the experience of going through it, right? So yeah, it was pretty intense, and I've read and saw, probably like you guys, a bunch of people doing crazy stuff during the first weeks of confinement. I even saw a guy who actually ran a marathon on these terrace. So that was crazy, right? So the guy literally ran 42K on a 8-meter long, so that was totally crazy. So that wasn't my case. Like, I literally spent, full day from very early in the morning up at night, because we have companies in the US as well. So that was pretty intense. But the level of professionalism and the agility of all these teams have been incredible. Like, it's from something you couldn't expect. Like, literally locking down an entire continent from, in a couple of days, which no one has seen. Like, I mean, no one, even the older ones, haven't lived the war, right? So, I mean, confining a full continent in a couple of hours. I mean, these teams have been incredible. So, no, hats off to all the entrepreneurs we're backing, and all entrepreneurs out there. Actually, I mean, everyone has been pretty agile and pretty impressive.
Yeah, it's interesting because you have a VC fund that your DNA is to be entrepreneurs as well, no? So
yeah,
you know very well the feeling, no? And
mate, I wasn't doing the job 6 years ago, right? So it's all new to us as well in a way. But yes, at Breega, as you may know, we're all entrepreneurs, and so as founders, we've been on the other side of the table during crisis, and we kind of know what's going on, and you never plan for bad enough. So we're so telling guys, hey, it's usually much easier to accelerate rather than decelerating, right? So don't push too hard. Wait a couple of weeks and figure out exactly what's going to happen. And once you have a better view, then you can put more fuel into the engine. But it was pretty hectic. It was cool.
yeah, definitely. But hectic is a great definition. Yeah. And what about you, Peter? What was your feeling during this period?
I think, a couple of relevant things have been said from Megan and Ben here before, but I think we're a fund that is industry agnostic. And so I think it's a topic that was really dependent on the industry. So companies in our portfolio that have been for example, in digital health, have seen massive tailwind during this crisis. Any company that is obviously somewhat related to travel has seen an impact during the physical lockdowns. But I think what all of them had together is sort of doing a review of commercial impact, of run rate, of when is the next funding round planned, doing some more thinking around ramping up burn, further hiring compared to sort of like initial plans. But it's actually really by industry if you accelerate those hiring plans or if you slow down hiring plans. And I think one thing which was very common in the portfolio was intense discussions around moving to remote work in the companies. Mm-hmm. I think during physical lockdown, everyone of course was at home. But I think in the past 1 or 2 months, most entrepreneurs getting their new status quo, and some of our companies have got rid of their office and switched to remote first. Some of them are running a hybrid, and I think we, for example, last week hosted a webinar around best practices from the past 1-2 months in portfolio companies, because I think it's a challenge that all of them are facing now at the same time.
I agree with you. Like somehow I'm feeling old. I'm actually turning 40 this year, right? So, and I'm turning, I'm jumping on the other side again. And
you don't seem your age at all. It's
thanks, mate. And yeah, I think there was a lot of frenzy around. The office is dead, and we're all going to work remotely, and blah 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 blah. I'm going to sound subversive and old, but I don't think it's really this. I think a lot of people still need to be all together, and what we saw at Breega as a company, like it was very good at the beginning in terms of production rate and capacity to sort of nail down stuff you've been piling up on your desk for a while. But in terms of creativity and sharing ideas and all this kind of direct communication with others, I think seeing people is still good enough, and so will we go back to a sort of 5 days a week office hours? Probably not, but no office at all. I doubt it. And I know a lot of people took a few examples at work. But it's like the college dropouts, right? Bill Gates and Mark Zuckerberg didn't finish, but that's 2 of them, right? And the other vast majority of entrepreneurs who made it actually went to university and had a degree. So I don't think there's not a specific rule, and you cannot take a few examples and make a rule out of it. So So yeah.
It's a very good point. We did some webinars in regards to that. I think that in terms of operations and efficiency, it works quite well to work digitally. But as you mentioned, no, creativity, the conversation in the coffee machine, no, and this kind of stuff, that it's where sometimes you develop an idea that needs to be in the office, no, and probably we'll have this blended situation in the future, but still the office is at some point necessary, no? So interesting. So during this period, as you mentioned, different companies, different verticals, some of the companies very affected, some of the companies they've been very lucky because due to this change of demand, no? So, but did you change your investment thesis during this period? Have you decided maybe to invest in companies like I don't know, education tech, ed tech, or companies that they are anti-COVID at this moment of time, or maybe in companies that follow-ons or companies that you know, or maybe you remain with the same investment thesis? What has been your approach? I imagine, Megan, that you basically didn't change because it's going well, no? But what has been your view on that?
Yeah, for sure. I mean, one of the funny things when COVID hit was this movement, this kind of excitement around working from home, remote work, automating processes. And I think what was funny for us is, you know, we've been investing in kind of enterprise automation for the last kind of 3 years. And that wave's really been happening a lot longer than that. So it was kind of like a funny when everyone was starting to talk about it. Most of our portfolio are companies bringing that forward. So yeah, investment thesis hasn't changed. Investing as much as we were before. Pretty happy with the thesis right now.
Okay, so basically you remain with the same investment thesis. What about you, Ben and Peter? Did you change it, or did you pivot a little bit, or not? More or less same stuff.
Peter, do you want to give it a go?
I mean, we didn't change anything to our investment thesis. So remained with the same focus, with the same industries we look at. However, I would say we obviously spend time on looking who are the COVID beneficiaries, which are the industries that have, you know, an uplift from that. I think what's key to us that it's not a short-term uplift of, you know, things that might be very relevant in the next 6 to 12 months, but really make sure that it's a more sustainable and long-term trend that is coming from COVID. But I think, you know, have been looking more closely into areas like remote collaboration, communication tools, models enabling e-commerce, digital health, but also, I mean, to very additional industries, and Megan also mentioned it before, have seen the acceleration to digital and the fast track. So for example, if we look at B2B marketplaces, where digital transactions are more needed than ever, and companies are getting, even traditional industries becoming more open to digital solutions now. We can see a accelerated long-term trend, which we think is, you know, similar attractive to the, I would say, current hype topics such as remote collaboration or communication. Okay,
I read your Medium post, your matrix in terms of fundraising. It was quite interesting the matrix that you have created of what was the situation before COVID and after COVID, or during COVID period, in terms to fundraise. No, it's like okay. So I suggest that everybody reads your Medium post, because it was quite it was like a consultancy bit, a little bit. It was like a McKinsey chart, no, a little bit.
Maybe a little bit. I hope it doesn't look too consultancy though. But I think it should give a guidance of entrepreneurs of what's the impact on fundraising, because I think that's one of the questions that VCs got asked a lot the past months. Like, can I fundraise right now? And I think the underlying conclusion of it from our end was, you know, if you have a negative impact on growth or a neutral impact on growth, it will be harder to sort of like raise funding. for neutral impact, it will probably be more, you will have slight impact on valuations also. And then on the vice versa, accelerated growth, positive growth, you can really see themes getting suddenly hot, companies raising at higher valuation, vast amount of capital going even more into certain verticals. So it's really about mapping out like how you are in sort of like COVID impact and your actual performance, which you had pre and after COVID in terms of metrics.
Okay, what about you, Ben? Did you change anything or
Changed
no?
everything. Went to the Bahamas and sort of invested in a couple of casinos. No. Look, I don't think there's a real reason to change anything. Like it's there's a bunch of behaviors that got accelerated, which I think is great, and you can probably double down on these. On the other end, I think confinement demonstrated some limitations as well. So I think people are happy to have a non-digital life from time to time. So I think I'm very much a believer into a more sort of a multi-channel kind of approach more than anything else. So I think that's, to me, the one sort of winning bit in terms of what's there for the future. I think future of work is one. I think multi-channel is what people would expect, like the capacity to be agile and work from home and have a space to meet their colleagues and stuff. Same for fitness, where you want to be able to do at home and go to the gym or run and stuff. And we saw a lot of people going back to my marathon guy. I don't think they would do that on a weekly basis. I think that's one shot, but it's not something you want to do every day. I think to be fair, I think the WeWork disaster was probably more impactful to the whole investment industry than COVID, to be fair, as of today. I think, to me at least, and that's a bit of a personal view, right? But I think the fact that people realize that underlying unit economics and underlying business sense was important. Not that they didn't know of it, but just were sort of turning a blind eye to it and looking at other stuff. I think it's more important than anything else. So obviously, if you have a bit of luck and COVID helps, that's good on you. But can we really? I mean, did we change our investment thesis? No. Are we focusing on specific industries? No, because it's not on an industry basis. It's more of on a model basis, right? So it's really how could you figure out the way to attack your customers and deliver your service in the future that can be COVID proof. I think that's more the idea rather than anything else, because the vast majority of people want to be back in their normal life. So that's more our approach to it. But we've always been pretty as entrepreneurs. I think we've always been pretty open-minded about what we invest in. I mean, we're crazy enough to invest in hardware, right? So once you do this, you can pretty much do anything.
Okay. In terms of volume of investment, we had different discussions here in Spain. All the venture capitalists, they were saying we are going to invest exactly the same amount of money that we had in mind before the COVID, but the reality is that numbers has decreased. So what has been your approach in the ecosystems that you are working? What about UK, France, Germany? Is the volume of investment decreasing this year in the different venture capitalist funds, or what has been more or less the situation in your ecosystems? Megan, do you want to start with UK maybe?
Sure. Hard to say on a broader level, given how focused we are. But I would say that given the explosion of enterprise software through COVID, it definitely feels like there's been a lot more attention going into those companies. And so typically where we would maybe be coming up against a couple of funds, maybe one or two funds in the very specialized companies that we would invest in, we're definitely seeing, especially from the larger, more prolific Series A funds, I probably don't need to name, we're definitely seeing them coming down to seed stage, focusing on those companies, getting in earlier. Peter mentioned earlier some crazy rounds happening for those companies. So if anything, seeing more volume of capital going in at these companies that maybe have a design for a product on a piece of paper, raising at Series A valuations. So that's been an exciting time.
Okay. And in France, more or less, Ben, this has been any...
Look, on our end, yeah, it's funny you say this. I think, because of the fact that we invest, well, in sort of, France, the UK and Iberia, we kind of see a very different behavior in terms of how people are exposed. I think the way...
What's the difference? That's interesting. What's the difference that you have basically, I don't know.
Well, it's easy. It's easy. It comes down to how much tax do you pay, right? So I think, I mean, government poured so much money in France compared to other, ecosystems that, a lot of French companies have a lot of money now, right? So, which is non-dilutive and pretty cheap. So if you're a founder and you receive a check in June, why would you go and raise in September, right? It doesn't make a lot of sense. So, so it's very different from one ecosystem to another. I think the worst one, to be fair, is Spain. I think even the UK, even if government hasn't been as generous in the UK, I think that the laws around furlough and all of that kind of helped entrepreneurs quite a lot, and plus the future fund and stuff. I think there's been a bit of capacity, of financing capacity that we didn't see in Spain. So I think that the ecosystem, which to me at least is suffering the most, is probably Spain, and so deal flow there hasn't changed much. Mm-hmm. Then the question is, would VC invest? I suppose they would. I think, especially if you're part of the solution rather than anything else. And I think that's the major difference between this crisis and the one in 2000s, right? I think tech can provide a part of the solution. I think there's no reason why you shouldn't be able to raise. But from one ecosystem to another, I think, it's been complicated. Well, and to be fair to VCs, I think, from mid-March to end of April, it was kind of saving portfolio first. So, it was kind of complicated to run proper deals. And then it's May, and then it's June, and then you fall into summertime, and then people are on holiday in Greece, and then you come back. And so now it's time to be back into business. But yeah, I think for the French ecosystem itself, I think, the level of rounds is probably going to be lower this Q4, and it's going to pick up again in Q1 because of the government money. But all in all, if you look at the broader picture, the sort of top tech nations, the US and Israel, they sort of invest 0.5% of GDP in tech a year, right? I think, Europe is far behind. And to give only the numbers for France was 0.2% last year. So we're still 2.5 times down, right? So, I mean, the longer term vision is that if you believe that Europe has a good reservoir of talent and of educated people who know about tech and want to change the world, there's no reason why investment should reduce in the future. So that's my optimistic view of the coming months.
Yeah, no, it makes sense. At the end of the day, all the venture capitalist funds, they fundraise a lot, and they got to pay. I know they receive the management fee of the LPs, and at some point they need to invest. No, so that's the model, no, of the venture capitalist. So let's see. And Peter, in terms of you can give us a little bit of overview in Germany, Sweden, the US as well. What has been the difference between each ecosystem?
Yeah, I mean, I think, first of all, the underlying theme has been the same, and that was, I think, March and April when you had the physical lockdowns. It was high level of uncertainty, and then you saw, the real impact on some rounds not happening or around getting moved to a different point of time. I think after that, it has been picking up very quickly, and it has gotten quickly to normal levels. And I think here in Berlin, the good companies go out, raise very quickly, raise at high valuations, raise large rounds. So everything that you've seen in January, February continues also now. I think for the companies that have been you know, they have been negatively impacted and cannot show, let's say, typical metrics that we see get excited about in terms of growth, in terms of momentum. Obviously there it's different. So if you would say overall, probably there will be, my guess would be that there will be a bit fewer rounds happening this year and a bit fewer companies getting funded in all those mentioned ecosystems. But I would say the difference between Sweden and Germany, for example, wasn't so big as we saw. And I think for the US, I mean, they came in a bit later with lockdowns, but the lockdowns there came at force, and I would say very strict, especially in the Bay Area. And there we rather see, I think the biggest trend there is actually that, you know, people moving a bit away from San Francisco and are much more distributed around the area there. But you know, I think I wouldn't make a too big difference on rounds happening between the different ecosystems that are relatively mature.
Okay. During this period, I think that the major impact in Spain, apart of the local VCs investing a little bit less, one of the biggest impact was basically to the decrease of the international venture capitalists in the ecosystem, no? In that sense, what's your view? Do you think that are you going to invest in, or are you willing to invest in projects in Spain in the next future? I think that I don't know what's your message to the Spanish ecosystem. You are very active in the deal flow. You know quite well the ecosystem. You have already invested here. So are you willing to keep this tracking going? Do you want to start, Megan, with that? Well, you already answered in Twitter that, so it's just to reinforce your answer in Twitter, right? Your micro is in now.
Sorry, I'm muted because there was a train going past. My slightly longer answer than on Twitter. Absolutely investing. We actually closed our second Spanish investment as COVID hit, so we very much saw what was going on in Madrid as it happened. Very excited about that one. I think more broadly on the Spanish ecosystem, we're seeing more repeat founders, more money at the beginning. Most major cities have kind of been through at least one wave of big companies, you know, pretty good exits. So we're starting to see even the distribution of talent across Spain growing, becoming more impressive. I think it takes time for an ecosystem to develop, but I think we're starting to see that compounding effect of those exits and that talent increasing. And the investment that we just made, I can't announce because it's not public yet, but the 5 co-founders are all started a successful company in Spain before together. So we are even investing in that second generation of
That's a very good clue. I think now the project. Okay, fine, good, a good one, you invest. Okay, fine. So that's interesting. So you view. Yeah, part of the question, you develop your view on the Spanish ecosystem. So what's if we come back 10 years before, it was like I don't know, well, maybe 10, 15 years ago was like a desert that in terms of tech, no? Now it's developing. So what's your view in the future on the Spanish ecosystem?
Me?
Yeah.
Yeah. I mean, broad view on the future is highly positive. Mm-hmm. You know, we found that deal through a close network of the startup ecosystem. So we're kind of really relying on that network more and more. I think we'll be, when we can, spending more time here. But yeah, I mean, broadly positive, definitely looking at it very actively.
Okay. Thanks for the vision. And what about you, Ben? Well, you have been very active as well. Are you willing to stay in the same position as before? And what's your view on the Spanish ecosystem? What do you think about that?
Yeah, look, I was joking earlier. You know, I have my checks ready, so it's open for business, right? So you know, there's no reason why you should change. I mean, you know, as you said, you know, I'm lucky enough I can speak Spanish, which helps. And I just can't wait to spend more time down there and keep on doing what we've been doing in the past. So happy to back founders early on and help them grow in Europe or in America. And as you know, we've had the capacity to grow fairly quickly at Breega, and now have a platform where we can invest from sort of pre-seed to Series A. So with from a couple of hundreds to a few millions to start with, and then keep on growing and helping our founders with our strong operations team. And we're actually thinking of probably setting up an office down in Iberia somewhere. So depending on if Catalonia or Portugal is helping us the most, we'll see where we're at.
You are more than welcome in Barcelona, you know that. So even if you want to share our office, now we have a space. So more than happy to host you.
Good. Thanks.
Okay, fantastic. And Peter, you know very well as well the ecosystem, and with Factorial you had the first investment. What's your view and what's your willingness here in terms of investment?
So I think, the first thing is the view hasn't changed pre-COVID and post-COVID. So
Okay.
that's continues to be the same. I think we are, it's fair to say that Spain is still sort of like maturing, and that it's behind, let's say, London or like UK and Berlin, but it's, it's catching up, and we are very bullish on the underlying development there. And it's really that the fundamentals are in place from, good technical and business universities and talent out there. Actually, some advantages coming from it, that it's less pronounced war for talent if you compare it, for example, with the London ecosystem. And you still have, like great hubs and ecosystems in especially Barcelona, but also Madrid. And I think the two factors, one is that Megan already mentioned this, is role models have been built in the past years, and it's second time entrepreneurs getting to the market. It's larger rounds and exits already happening. And the more we see of this, the more vivid the ecosystem will be. And I think a very important factor is also that we have a huge increase of availability of Spanish early stage money, seed money, coming from actually local seed funds. And I think that picked up massively in the last 5 years compared to 10 years ago, which we think is really important for a flourishing local scene. And thus we decided to spend more time in Spain. Happy to back Factorial in Barcelona, and typically I would say I'm over there every 6 weeks. That changed with obviously with the whole current travel restrictions, but as soon as that will be open again, it's back on the agenda. And otherwise, Zoom works out great as we see today as well.
We have a space for all of you in the office, so more than happy that you come here in Barcelona. And I think that part of Madrid, Barcelona, Valencia is a good ecosystem as well. People like Lánzame are doing a great job today. I read that they are hosting 130 companies now in the accelerator. So things are going well in other cities as well. No? So, okay. Another question that I have for you. Basically, we observed in 2008 during the financial crisis. Well, I was working in investment banking, so it was a tough period in 2008. But I think that in terms of venture capital funds, we observed in 2009 and 2010 two great years in terms of projects and investment, and returns. I think that they were projects that they were very focused on capital efficiency, and we had great performance of VCs during this period. Do you think that now it's going to be a good opportunity for VCs? Maybe they got the chance to invest in great projects with a lower valuation and increased returns. So what's your view in the next couple of 3 years? Maybe can we replicate the same of the last financial crisis? Megan, do you want to start?
I don't know if I should pass on this one. I won't say where I was exactly in during the financial crisis and following. I'll save everyone that. I mean, I don't have the comparison, not from working through it, obviously very aware of what happened. But from what we're seeing so far, there's been a very positive response in certain sectors. Obviously, enterprise software, I won't have it at home more. And I think we're going to continue to see that digital transformation shifting forward faster than we thought it would. So I think there's definitely opportunities. How hard the crisis will hit when we look back on it in 5 years, I can't predict that. Will it get worse if it continues and we don't have anything to antidote to the virus? Then I don't know. But currently, it seems pretty positive in some spaces.
Okay, clear. Do you think, Ben, that, I don't know, this resilience in the entrepreneurs now, maybe it's an opportunity to, I don't know, to develop great projects and for VCs to have the chance to invest on these kind of projects?
Yeah, look, I think it's really hard to compare these two situations for various different reasons. Right? First one is obviously European tech at the time was not what it is today. So Megan was mentioning, you know, the number of experienced professionals into tech and the history they had in terms of successes and experiences is something we didn't have at the time. So this cannot be compared. And another major difference to me is that I was talking about, you know, how much Europe is investing to its GDP versus the best tech nations. I think, you know, at the time it was pretty much nothing, right? So I think 2008 was a kind of an ideal era for VCs, where a bunch of you know, great professionals coming out of their jobs kind of have nothing else but being an entrepreneur, or at least giving it a try, with less capital at the time. The very beginning of, you know, digital marketing and stuff. So you could actually acquire and challenge, you know, big established players with less cash and be much more capital efficient. So it was a bit of a different time. So I don't think we can quite compare. The one point that is, you know, probably if you know, confinement leads to a much higher rate of digitization of the world is that kind of wave, right? I think the 2008 kind of benefited from two major shifts in terms of tech, which were both, you know, the cloud on the sort of back end side of things, and the mobile on the sort of front end side of things, right? So people finally had, you know, 24/7 access to the internet, which we were hoping for in the 2000s, but kind of exist, you know, finally in the 2008, 2009. We don't have such a revolution in terms of tech as of now. You know, people have been talking about, you know, VR on the front end and blockchain on the back end. It's not quite ripe yet, right? So we're not there yet. But the level of digitization is, you know, through confinement is probably increasing. So there should be a massive wave of entrepreneurs going back to it, and there's a lot of cash available. So maybe investors are going to be a bit, you know, pickier. So maybe there's going to be more money to fewer projects. But the reality is that, you know, I think it'll be a very different situation. I'm not going to complain. Like, you know, I'm happy to be an investor in these times. Obviously, you know, crisis at the beginning, you know, will make prices a bit lower, maybe, but not quite as impactful as the previous ones.
So maybe, as you mentioned before, all the WeWork scenario, maybe we are going to invest in more
Yeah, well, that's my view, right? I don't know, like it's, you know.
No, I totally agree with you.
That's my view. Yeah.
Okay, Peter, and what do you think about all this topic?
Yeah, I mean, in the end, every VC is looking for large outliers that creating, you know, very large companies. And if we think back to, you know, 2008, 2009, 2010, the crisis there, CREANDUM, for example, they invested into Spotify back in 2008, and they raised larger rounds in 2009 and 2010 as well. And so you can see that also in challenging times, you know, one of the most successful tech companies in Europe can be built and born in those times. And I think most VCs don't want to miss on the best companies or outliers that are being built. And if this happens this year or next year, or you know, I think the search and look for it always continues, as venture is also a long-term game where you look for the next 5 to 10 years and beyond, and not necessarily only for the next 12 months. So different dynamics maybe in the market, but I think you know, same opportunity to create great companies.
Totally agree with you. So good time for entrepreneurs as well, and for VCs. So let's be optimistic. And in order to be optimistic and close the webinar, I think that it will be great that you give a positive message to the Spanish ecosystem. So I don't know if you can give us some, I don't know, energy or some positive energy.
How more positive can it be? You know, we all said, hey, A, we have money to deploy. B, we're happy to spend the weekends and weeks in Barcelona. And C, we can go from very early stage to later stage and back the next outliers. So guys, just, you know, roll up your sleeves and make it happen.
Okay, so that's definitely a positive one. But let's find a second one. Peter, you want to, I don't know, say something positive here?
Yeah. Hey, I think the Spanish ecosystem is probably one of the ones that has, you know, thrived most and merged most in the past couple of years in Europe, and we think that trend is going to continue, and love to spend more time in Spain. It's not only the country in Europe where there's more sun shining than in Europe, but it also is a country with fantastic entrepreneurs out there, and a very young but hungry tech scene. So we love that. And you know, hit us up anytime with a project from Spain. And I think it's a good thing to notice that the world is flat, and being based in Spain, UK, or Germany, I mean, you can tackle the world, and we're looking forward to see that.
Great. What about you, Megan? Positive one to close.
Yeah, maybe I'll echo that. I mean, even for us, the last few deals we've done post-COVID have been outside of the UK. And I think we're really starting to see this surge of global companies being built across Europe, across cities. And I think whereas previously they would have been seen as local champions, we're now starting to see global winners.
Mm-hmm. Nice one. Okay. So let's see what happens in the next future. I hope that you come very soon to Spain, and especially if you come to Barcelona, let us know, and it will be great to catch up again. I hope to travel as well and go to London, Paris, Berlin, everywhere, and I think that it's great for entrepreneurs this period. It's everything is changing every week, so that's a perfect atmosphere or to adapt and to respond in agile way, and I think that it's gonna be interesting time. So many thanks for your time and all this webinar, and it has been a pleasure to share with you this discussion, and as I said, looking forward to meet you soon.
Thank you for having us, Jordi.
Likewise. Thank you.
Thank you. Have a nice
Thank
day.
you so much. Yeah, you too. Bye-bye.
Bye.